Hi, everyone. It's a pleasure to be here. I know we're all a bit tired after lunch specifically, but today I want to share more about cybersecurity and building securely on Ethereum. I want to understand quickly how many builders here on Ethereum ecosystem. Okay, good. So my talk would be about like cybersecurity and how to build resilient systems on Ethereum, and how to make sure that whatever you build these days connected to blockchain are secure enough and you minimize the risks of being hacked as much as possible. Quickly about me, my name is Yev. I'm a co-founder and CEO of Hacken. We are a blockchain security and compliance company working in different directions, starting from smart contract audits, bug bounties, and also we do a lot of work on on-chain security monitoring and compliance these days globally. We've been on the market since 2017, starting from a small team in Ukraine. Now we're 140 people all over the globe, serving more than 1,500 customers, starting from different regulators, enterprises, financial institutions, and more builders in the space from different crypto exchanges, blockchain protocols, and stuff like that. So honestly, the situation in Web3 when it comes to cybersecurity is like never-ending story. And what is important to understand that cybersecurity is the process, not like a point on time that you can solve with like one-time audit or just a like product that can save you from all the potential risks. And taking into account that, it's important to understand how many different layers that you need to protect while building any crypto project. So what is the major security risks that we have in this industry? It starts definitely with the operational securities and the breaches that we have these days. Probably a lot of you heard about the private key leakages, access control issues, and this is something that comes mostly to the human side of the things rather than technology, because it's about like how we as humans operate all this critical infrastructure. Then it goes to critical edge cases bugs that we can see on the smart contract layer, on the protocols itself, and the cryptography and the infrastructure. And something that we keep seeing more and more is the social engineering, phishing, and like deepfake attacks, which target crypto users more than ever before. Because like back in 2017, it was easier to create like a fake Telegram group, website, or something like that. And these days, it's more sophisticated. We can be on the Zoom call with someone, pretend to be someone, sign transactions, and lose money. So I believe every day it's becoming more and more sophisticated, and it's this like where we need to like double down on the security mechanisms. We do quarterly security reports on Web3 and all the attacks that's happening there. So feel free to check it out to see all the information regarding the type of attacks, the specific use cases, and what went wrong there, actually. So for like first half of 2025, we lost more than 3 billion already. And if we look at the numbers for the previous years, we see that we're unfortunately on the positive trend of increasing these numbers. How many of you heard about Bybit hack? Okay, great. So that was the biggest hack in the history in terms of the amount lost, and which is interesting. That was specifically connected to the operational issues and like private key problems. Then we have still a lot of the vulnerabilities on the smart contract side, which we like trying to eliminate as much as possible, but still it's not enough. And you know, with security, you're always building the layers of protection and minimizing the risks for your infrastructure, for the company, for the people, and for all the operations. And of course, we see the increase in the AI-related exploits for the last couple of years. So if we look at all the potential Web3 threats, definitely it starts with the pace of this industry and the desire to ship fast and not taking security that seriously and dedicated time and resources for that. Then we look at the whole software development life cycle, and that security should be implemented from the day zero, while you're making the architecture for your system and making sure that you have proper threat modeling, and for each threat you have the countermeasures that you made to protect it. So honestly, security should start from there. What we see on the projects regularly, they develop something fast, and then they want to do security for a couple of days. Audit is done, and they hope to be secured, but usually it's still not the case. Of course, we, as the result of this kind of nature of this speed and the industry, we have not enough documentation, not enough testing, and as a result, we have missed business logical issues that lead to more really catastrophic results. Good. So how to address this in this nature of decentralization and specifically Web3 ecosystem and environment? What should be done on different layers of security? I divided this to team and operations, Web3 logic and on-chain infrastructure, and monitoring and incident response. If we look a bit to the current regulation on the market, for example, DORA in European Union or ADGM and VARA in UAE, and if you look to the requirements for digital assets, they should have security. Which is really pushing more to the regulation in the system and making all the industry secure. Because in their regulation, they require to have annual security audits, they require to have on-chain monitoring, incident response, and actually report all the possible cyber incidents that are happening there. And it forces companies to take care of security seriously. So if we look at the first block, secure teams and operations, probably you all heard about North Korean attacks this year and private key leakages for the key blockchain projects. And that's something that keep happening for last couple of years. But we see the results of these operations this year a lot, with companies losing a lot of money because of this. Usually it was either insider threats or spear phishing for specific individuals in the company that got their devices got compromised, and then these devices that get access to the network itself and getting access to private keys. That's something that we keep seeing over and over. So I would say how to prevent this, it should be definitely complex actions, starting with having security policies in place, with having the proper device management, also basic stuff like having 2FAs, password managers in place, and having the policies. How do you sign transactions? How you generate keys? How you revoke keys? How you rotate keys? And in this industry, we have a great standard called CCSS, Cryptocurrency Security Standard by C4, where that helps you to guide how to properly organize the key management from the security standpoint. You can see guys like Fireblocks, BitGo, and others, they did this kind of certification. And in this way, you can be sure that they follow the best practices when it comes to security and key management. Also, what is important is to have Web3 security awareness training, because honestly, if we look at the targets of the company, it's not about C-level or developers. It could be anyone, because as in Web3, we operate with a lot of different stakeholders from marketing, listing, PR, whatever. But this is just in the entry point to your system and to the ecosystem itself of the company, how to get further. It should not be all the time the CEO. It could be literally everyone. That's why it's really important to have proper security awareness trainings in place and do it regularly. Also, something that makes sense to do is to have phishing simulations. Probably, if you're in this industry, you keep getting a lot of spams and phishings in your Telegrams, Twitters, email. So be really cautious. What are you clicking and who is it coming from? Because these days you got a lot of attachments, a lot of fake websites, a lot of stealers that can easily get to the resources that you don't want them to get. So going to secure infrastructure. So what does it mean infrastructure here? Here I mean all like user-facing apps like websites, mobile applications. It also includes all the cloud, all the like backends, which could be like blockchain protocols, smart contracts, and everything related around that. So what is the best practices in this industry to have like less risky but still secure ecosystem is that you go through monitoring your perimeter first, getting all the like logs, having multi-signature wallets. You definitely need to have proper asset inventory management and make sure that you actually understand what's in your infrastructure. Because like referencing back to the nature of this ecosystem and how everything ships fast and chaotic, I would say that not every time you know who is responsible for that domain, for that server. So you need to make sure that there is like proper documentation, proper monitoring of your perimeter, and you understand all the access control issues. And of course, having proper like penetration testing, both internally and externally, that's something that can help you prevent the future hacks. Then I would stop here more on the Web3 logic and on-chain execution. So yeah, definitely it should start with the like day zero and proper like software development lifecycle. So from what we see, it's not the case usually, but still you need to have the proper documentation, tests, white papers, and information on your website, and it should be the same information all over. I know that sometimes we just keep changing stuff, and it's usually not the case, but still that's really important. I think we had just a couple of days ago, we had the lunch with one of our customers, and he says, like, I'm really lost in all the updates we do because we changed our like, strategy quite often. And whatever is in our white paper, in our code, might be like totally different. So make sure you do this properly. This is the first step while developing it. Second step would be proper testing, having all the possible like coverage for all the functionality that you build there. And also, usually the best case is to use trusted libraries rather than doing like cryptography from scratch or creating your own own security mechanisms. If you can use like some trusted and trusted packages, just do that. And I think what is important is to have someone responsible for security within your team, someone who coordinates all the vulnerability disclosures, all the security audits, bug bounties, monitoring, handling incident response. So this is like in the critical moments, it's really important to have such coordination center, I would say, and the policies like how would you work in the case if something happens. When we are talking about security audits, the best practice there is to have multiple audits from different auditing teams, because in the end of the day, we deal with people, and people is the weakest point that we need to eliminate. So definitely having proper security audits, then crowdsourced audits, where like any like bug bounty platforms, it's really important. And the next step would be having proper monitoring. Now we are getting more better, like in the recent year, regarding the monitoring all the on-chain activity and trying to spot the attacks early on. But there were situations in the market where teams didn't know that they've been hacked for like 6 days. And for 6 days in crypto, it's just like endless. If we look at the Web3 and the Web2 projects, in Web3, you know that something is going on immediately because it's on chain, it's available for everyone. And in Web2, you would probably not even know that something has happened. But in Web3, you cannot hide the incident. It's there, and you need to take actions. You need to communicate it properly with your community, customers, partners, regulator. So that's where monitoring comes in place, and it gives you the visibility of what's going on chain. Yeah, so this is the critical part here, because there were a lot of cases in the industry when teams got information early on and they were able to prevent even bigger losses in the industry. Also, what helps is having proper bug bounties, because in this way you have proper vulnerability disclosure policy and point of contact for ethical hackers, researchers, and just, just your users who spot the potential vulnerability. Because from our experience, the best bugs are submitted by developers from the ecosystems, because they know it, they work with it every day, and they can easily spot on what's going wrong there and, prevent the potential risks. Yeah, if you like look at this as the layers, I would suggest to look at this like code security and post-deployment security, starting with the secure development standards, then going to the gap assessments, audits, penetration testing, also covering proof of reserves and licensing requirements as additional layer for compliance, having crowdsourced bug bounty testing, real-time threat detection and response. And then if you're like exchange or token, it's great to have security ratings and trust scores on some third-party platforms. Because if we look at the like digital asset landscape, there people talk about risk, and cybersecurity is one of the major risks there, and they need to count it somehow. So having all these best practices and like proper audits, certifications will help a lot to get like a better risks, like risk measurement stuff. Yeah, I think it's that's all. So the final thought would be that security is something that's better do preventatively rather than dealing with the consequences afterwards. So make sure that you invest time and resources in your personal security, your exchange accounts, your wallets, just your phone and like your laptop, and having the proper security there, and then scaling this to the companies that you built and infrastructure you built. So being there before it's too late is really important. Thank you. Do we have time for questions? Yeah. Yeah, sure. One, like, okay. Yeah. I think we can share the presentation afterwards.
For wallet hygiene. Was there a question? Yes. Okay. For wallets for companies or for people in terms of multiple wallets, do you have like a money in and that's like a zero balance where you then move that to other wallets? How do you sort of structure both, I guess, maybe personal and corporate?
Yeah, I think at first it's really important not to store this in the centralized places, because in crypto your key is your crypto, and really important to diversify. Second, I would say, and make sure that like those like assets that are online, that's something that you essentially need right now, and if it's not, it's better to store it in the like cold wallets. Yeah, and also important to manage private keys properly. There is a lot of best practices there, how you do it in the best possible manner.
Like that being, AI agents, how they can the smart contract and so on. What's your position on that? How is Hacken building some agents or with you guys? How do you foresee what's going on?
Mhm.
So now you put that there. Thank you.
Oh, like 5 years is a great question. Yeah, so definitely we do build internally everything connected to AI security, like auditors, let's call it like that. And for this 8 years, we have like a lot of data that we can build on and like help to automate a lot of smart contract review process. But also, we still believe it's not enough. We can definitely automate a lot of stuff and, use the best knowledge we have on the market for as the first kind of line of check. And then, of course, it's like human reviews, like line by line reviews. But also, I think it's important to build, like kind of see AI and security from different sides, how AI can accelerate security and how we need to secure AI. Because this is another topic that we are working on, like how to properly do like red teaming for these LLMs, how to properly test agents, because it's something that we keep talking about payments, but we're like kind of delegating a lot to AI agents these days, and it definitely should be done securely.
Like for a lot of these steps, it seems like most of the hacks now are large percent are operational. Like the fault is in the operations of the company and its source funds. Do you think the path forward for this is for people to get better operationally, or is there room for is there another future path where there are companies that come up that find solutions to make it still easy, so people don't have to do the education, right? Because it's very hard for people to, to really educate the whole industry. Like we've been trying for a long time to do so. Like, use any way that we can do this without education, we can make better products.
Yeah, I think it's like a two-way movement that we can do this from the like product builders as much as like to leave as less as possible the avenue for risk. For example, if we look at crypto exchanges, they now like more advanced in the like user security, having like phishing codes, like 2FAs, passwords, and it's like actually mandatory while you're registering there. So they force you to do security. I know sometimes it's complicated. For other sides, I think it's still important to do this awareness, because when we are like onboarding more users that don't understand how crypto works and what is private keys, I think it's important to like keep iterating on that. It's never enough like awareness for this topic. So from one side, building products where it's like less possible like a human risk, and from other side, educating users. Thank you.
All right, great. So we got Noah Thorpe here, who's going to talk about AI trading meets on-chain capital markets. Noah Thorpe from Upside.
Thank you. Hey, great to be here. Thank you all for joining. I'm actually curious, how many people are also attending conferences in the Asian ecosystem or in Dubai, or how many people are mostly local here? Okay, all right. Yeah, it's interesting because it's really different flavor here in the Bay Area than it is in other places, and so it's interesting kind of bridge some of the topics that are coming up in other ecosystems to here. So I'm going to talk today about AI trading meets on-chain capital markets, and the subheading is the evolution of markets few understand. And the reason why I'm saying that is because generally we think that maybe the markets that are going to be on-chain are either going to be like DeFi or they're going to be like the existing public markets. But in this talk, I'll talk about how they actually aren't going to be like either of them. They're going to be something new. So the reason why I have the insights I'm going to share are that I'm from a company called Upside. I'm the founder there, the CEO, and we have built out the most sophisticated RWA tokenization platform. We're also a SEC registered transfer agent in the US, so we work a lot with securities. And we also build AI automated trading solutions, including tokenized AI trading. And we have great partnerships with Republic, Solana, Avalanche, Sui, Say, Hedera, Aether, BitGo, and we're going to be doing some work with SKALE as well very shortly. And personally, my background is that I was VP of engineering at NASDAQ for launching NASDAQ Private Market, also at SharesPost, CTO for Republic Crypto, done a bunch of innovation with Google X and a lot of other folks. So let's jump in. In 1971, NASDAQ reinvented the market with electronic matching of trades. And this moved from brokers to automated trading, or I should say automated order books, central limit order books. And today, this reinvention of the markets is happening again. So there's a mandate now from Wall Street, from Larry Fink is sort of the authority. You call this the Fink doctrine, which is everything's going to be tokenized, stocks, bonds, funds, etc. And we also have the go-ahead from U.S. regulators. So this is Paul Atkins saying, "Hey, the age of regulation regulation through enforcement is over." And that's a really critical change in the US. And so the US is poised to become the crypto capital of the world, which also means that the institutional side is coming in. And then lastly, we have like landmark deals that are happening. And this was the Wall Street Journal article that triggered the SEC chairman going on CNBC. And this was about the tokenization of SpaceX and Anthropic with Republic, called mirror tokens, which was giving public market access to private market shares. So right now, unaccredited investors can't buy SpaceX shares, and this is a vehicle for doing that, and it's tokenized. This is by Republic, and it happens that we're the tokenization engine for this, so this was very directly relevant to us. So I'm going to do a little bit of market mechanics first so that we level set, and then we're going to talk about liquidity and how things are going to be different. So a lot of what has been happening in the last 8 years or so is that we've been having blockchain assets like Bitcoin, Ethereum, and other assets moving into ETFs that are tradable on the public market. So this is the flow of essentially blockchain assets into the real world. And what's happening now is that we're seeing real world assets flow in the opposite direction. And in my view, we have to think about that from the blockchain investor perspective rather than from traditional retail. So traditional retail is getting access to crypto, but actually crypto investors who control $4 trillion worth of assets right now are getting access to the real world. And they're the ones shaping this new market. So there's more than 600 million blockchain investors. And if you look at CoinMarketCap or you can see that there's like $4 trillion worth of value. And this super rapid growth rate in both the value and the number of people holding it. Stable coins are going to be accelerating this quite rapidly. And at the same time, from the blockchain native perspective, there's like a diversification problem. On one side, you have Bitcoin and super volatile assets going all the way up to Memecoins. And on the other side, you have stable coins, which when you hold them, there's no return. And tokenized treasuries, which might be roughly 5% yield, maybe higher. And then you've got a giant portfolio gap there and of 7 to 30% annual return. There's some staking that fits into this category in DeFi, but you're getting back staking rewards that are also volatile like crypto. So what fills this is RWAs, and that's debt, REITs, bonds, real estate, stocks, funds, ETFs. All of these more traditional assets are being tokenized and moved on chain. $10 trillion RWA market projected by roughly 2030. Maybe it'll be a little bit further out than that, but we're at 30 billion on chain right now. So this is a 333x roughly market growth. This is massive. This is a massive change to how markets are going to operate. And there's a pretty complex stack of things that's necessary to make it happen. So you need to have a token administration platform, smart contract templates for RWAs, crowdfunding, private syndication for primary issuance. You need identity for AML KYC accreditation process. You need the wallets to work well. You need transfer agents, and you need exchanges, DEXs, OTC trading, alternative trading systems licensed to be able to trade these assets. So it's taken a while since the last wave for all of these pieces to be fully integrated. Now, there's a problem though, which is that RWAs today are illiquid. And the reason that take for example, Securitize's BuildETH fund. Treasuries are amongst the most liquid assets in the world in the public market. And on chain, these things they trade less frequently than the worst meme coin. There's so little liquidity for these assets. And so the question is, why is this? Why is a liquid asset becoming an illiquid asset? And the reason is that we have very fragmented standards right now on chain. We also have siloed identity. So the AML KYC and accreditation isn't portable between different tokens. And we have assets that are siloed on various different chains. We'll probably see the S&P 500 tokenized on 2,000 different chains, and those will all have separate prices. So this is a very strange kind of environment that's happening. So the other part is that there is a mismatch with market makers and the assets themselves. So professional market makers in crypto are more interested in trading crypto assets. They're making very good money. And public market makers are making very good money in the public markets, but neither of these is actually doing a lot of trading on chain. So we have assets on chain that are trading at an illiquidity discount because of that. The other reason for RWAs for this mismatch is that the automated market maker system for DEXs that use constant product automated market maker algorithm can only receive its supply of the two sides of the currency from a broker. So most people that are going to supply liquidities to these markets are not brokers, and so we can't get the same liquidity from DEXs that crypto assets have. Also, these limit order books that are used for trading are not really the right strategy for these illiquid markets. Yeah, so this is why we're having this breakdown. Fragmentation, lack of market makers. And then the other thing that's kind of changing this picture is that the primitives that are underlying trading are actually changing. So let's talk about like atomic composability for a second. When people in public markets talk about instantaneous clearing, like say NASDAQ is going to move to instantaneous clearing, which means the assets move from the buyer to the seller at the time of the trade, as opposed to being held for several days by the DTCC, which is the clearing company. So they're moving to instantaneous clearing, but blockchain instantaneous clearing is actually significantly more powerful than what they're describing. So what blockchains do is this atomic composability of transactions. So I can borrow from a lender, perform several trades, buying and selling, and then repay the lender, all within the context of one atomic or single block with the same timestamp. And that block can roll back or succeed or fail as one unit. So you can get 100x leverage on a trade with a flash loan, and then only perform the trade if it will be profitable. Like this is not what NASDAQ is talking about. This is a very significantly different trading environment. The next thing that's important is portable compliance. So with this, there is a need for the identity to be able to be portable between different trading systems, different assets, different borrowing and lending systems on chain to enable the composability between these on-chain smart contracts. And this piece is going to be really critical. So the transfer agents that are administering the assets are actually a key point where there's common identity, and those are going to be very critical for advancing liquidity on chain and composability. And then finally, AI agent access. So previous markets grew up in an age where AI trading and algorithmic trading gradually came online. We're actually launching these new markets during an era where AI trading is going to be the default. So everything that is traded will have an AI trading component, whether it's an assistant to help you to plan about what trades you're going to perform, or whether it's an independent agent that's actually doing the trading. And the on-chain transparent state of these assets, whether they're cleared, what the order books look like, is a major advantage for AI trading. But there won't be a lot of like manual market orders that will be happening in the future. It won't just be limit orders. So these things together are really new market dynamics. I just went through this. So the composability aspect is really important. So you can do things like you can borrow using your assets. So you can take your equity from a real estate, get out a loan from that without paying the taxes on it. You can use that for trading inside of another loan protocol, inside of another protocol. So that composability is like, it is actually a more complex trading environment because the relationship between all of your assets can be very different. It expands the range of trading strategies. And that is an exponentially more complex system because these are things composed with other things. So we've got kind of like an n squared situation. And then the composability of those things is open access. And so that's going to drive a lot of permissionless innovation. I'm just going to throw out like one big idea. The reason why I have this slide in here is because I was talking to a lot of regulators in Japan in South Korea, and I think that we kind of had this era where we had like code as law was like the original founding idea of Ethereum, and that what we ended up with when we got securities on chain is that we have to rewrite law in code. And I think where this is headed is actually regulation as deterministic code. So you can actually call the regulator interface as a program to be able to make decisions in real time so that you know you're compliant. And I think in order for that to happen, regulators have to be thinking that way. So I'm propagating this meme for for 5 years out when regulators start publishing their APIs. Maybe it's 20 years out. I hope it's 5 years out. Yeah, blockchain transfer agents are great for portable compliance because this will help to drive make the identity portable across the whole ecosystem. Regulated record keeping is a natural kind of mediator position. Yeah, so there's going to be this difference between on-chain assets and public market assets. So you'll have to make a decision between whether or not you want to buy NVIDIA stock or whether or not you want to buy GPU compute from a particular data center. So the range of ways that you can participate in a particular investment opportunity in a sector will become more complex. And this is going to be an increasingly complex ecosystem. And this is actually why AI trading is essential for us to be able to make sense of this so that retail traders and pretty much everyone all the way up the stack to super pro, that this AI will actually be necessary for making sense of this more complex environment. Yeah, so just to summarize, we're moving from this kind of like centralized dam era where we had kind of like siloed identities, closed protocols for securities, into this era of portable identity standards, atomic composability, and AI agents doing all the trading. This is the mind state that we're developing Upside, our operating system, which allows real world assets to be on chain, and we also are doing AI trading liquidity, so tokenizing these trading strategies, making it available for people to participate with. Yeah, we're SEC registered transfer agents, so we're actually filling that role for the being able to make identity portable and bring a lot of assets on chain to trade. Yeah, so that's what I have. Happy to take, I guess, maybe 1 or 2 questions. Yeah.
What part of a role involving RWA, you are token issuance, or you are taking care of the liquidity, manage liquidity, or yeah, what kind of role like a play for Upside?
Thanks. What Upside is doing is that we are really an infrastructure provider for RWA issuers to bring their assets on chain. So, for example, we're tokenization behind the Mirror tokens, SpaceX, Anthropic. Also, Animoca Brands, we'll be the tokenization engine for them. And then we're tokenizing these trading strategies that are provided by other people who have a position or they have alpha that they want to share. Those 2 things are very related to each other. They meet up sometimes, maybe not all the time, but they meet up some of the time. And we work pretty closely with market makers and also asset issuers.
What we're going to see assets. I think, we go from newspapers now to tweets.
Yep.
I mean, all this user-generated stuff. It's unstoppable. But think about how much content.
Yep.
Make an analogy of that to assets, what type of assets.
Yeah.
Yeah, how crazy it might think now.
Yeah. Yeah, I think also it's important to mention that the RWA space has had many names and has had a false start in like 2018. In fact, every time there's like a down market, like the RWA narrative comes into the fore. So I think what's changed now is that the first issue was there weren't enough users, and they had to figure out how to use wallets and stuff like that. But now we actually do have like $4 trillion worth of capital that needs to get diversified, and so that's going to drive the interest for these new assets. And I actually think it's the on-chain investors that are going to drive the interest for which assets are listed. And the more on-chain users there are, the more demand there is for diversification. So as stablecoins come on chain, they're going to pull more assets in, and we'll see this large variety of assets. We'll see every stock that's available tokenized. We'll see them from other stock exchanges that U.S. citizens don't have access to. We'll see foreign or non-U.S. residents being able to have access to U.S. stocks. But then we're going to see like more DeFi style packaging of assets. So we're already seeing this where like it's like a vault in some ways is easier to understand than like some other form. Like the idea of staking shows up in trading a lot more frequently. So you'll stake into a long short position as opposed to taking the long and the short position directly. So a lot of the DeFi packaging is creating new asset classes. But yeah, I think we're going to see like literally everything in the public market, and then all these hybrids that are going to come on chain. And the composability is going to be the area to watch, because it wasn't previously possible to like take a real estate asset, stake it into a loan protocol, immediately take that money out, move it into a Bitcoin position, take that Bitcoin, recollateralize it, use that as a flashlight. It's like it keeps going. Like you can compose these very complex things. Yep. I think that comes with that question is based on the mindset of the traders in many cases. So if you have if you're taking an asset that exists in the public market and you're bringing it on chain, then it has similar underlying dynamics to what it has in the public market. So if you were tokenizing GameStop, the community that's trading GameStop is very memetically oriented. If you were to tokenize something like Tesla, you're going to get people who are doing a lot more fundamental analysis. So those, it's more like the asset and the trader dictate the answer to that. Whereas I think the tokenomics question comes more from like the utility token community of like, how is this token going to fit into the protocol? Thank you so much.
Awesome. Thank you, Noah. Really appreciate it. Alice is up next and is going to be talking about AI agents, protocols, and primitives. And she flew all the way from Portugal. So please give her a warm San Francisco welcome.
Thank you. Hi, everyone. My name is Alice. I'm the marketing lead at Space ID, the leading digital identity and Web3 domain platform with 2.7 million users and 6.7 million domains supported. I'm here to talk about something that is exploding across the crypto space and breaking it quietly at the same time, AI agents and what's holding it back. A bit about me, I'm the marketing lead at Space ID, ex-CMO at Volks Finance. For the past 5 years, I've been deeply involved into fintech, specializing in strategic and product marketing for crypto, DeFi, and blockchain projects. I co-founded a Web3 marketing community in Lisbon and also became a mentor at Women in Blockchain Africa program. To set the stage, AI agents is no longer a futuristic concept. They're already beginning to play a role in automating our daily tasks, as well as managing our financial operations. TradFi giants like Visa, PayPal already adopted to this shift. For example, Visa released intelligent commerce that integrates AI agents directly into the payment flows, eliminating the need for manual approval of every step. PayPal released their agent MCP, enabling agents into the payment workflows like transactions, subscriptions, and others. And Web3 is lagging behind. In Web3, the infrastructure is still taking shape to support autonomous software that can act on users' behalf. Web3 still needs more robust infrastructure in place. Wallet interfaces, identity systems, execution environments, and other things I'm going to mention today. And the stakes are really huge. By the end of 2030, Vanek predicted more than 10 billion in annual revenue for crypto AI. Realistically, we can expect millions, if not tens of millions of AI agents running around. And to quote Mark Zuckerberg, there could possibly be more AI agents than humans. Why are we here talking about AI and Web3? Because the potential of AI and blockchain is gigantic. Being totally different from one another, AI and blockchain already stand out as the most groundbreaking technologies of this decade. What blockchain started, AI is going to finish with flair. And the convergence of Web3 and AI promises much more robust digital economy that it could shape in Web3. Even if centralized solutions have made bigger progress, it's still permissioned and centralized, and it requires human oversight that creates friction, and this hinders the full agent autonomy. Whereas blockchain provides a neutral, programmable solution, and here is the bare minimum of how AI will complement Web3. Democratic access and control, when communities govern collectively and power belongs to people, not corporate boardrooms. Anyone can contribute compute data or expertise. Enhanced privacy and data sovereignty when processing happens locally without feeding corporate surveillance machines. And here I'd like to tell you my personal story. As many of you, I work closely with ChatGPT and Claude. They are already not just my assistants anymore, but they're a part of how I brainstorm, create, automate, build. And for so many times, I would authorize and give permission to ChatGPT to process the files I uploaded. And for so many times, I would be so hesitant because I didn't know where it's going. A black box model I don't control on a server I don't own with a training loop, I'll never see. I was given parts of my knowledge, expertise, and even my voice without knowing where it's going. Because if I don't, I will deprive myself of the full capacity that AI could give me. But even Sam Altman on one of the podcasts mentioned that there is no confidentiality with conversations with AI, and if ever there is a lawsuit, they might be requested to provide the necessary info at the court. But there are projects in Web3 that prove that we don't need to sacrifice confidentiality for efficiency. And I'm going to mention those today as well. Innovation and diversity. When developers worldwide can build freely without corporate approval, it creates really diverse solutions without homogenized thinking. And it fosters breakthrough ideas that can serve real human needs, not just shareholder profits. Economic benefits. When value flows to creators, not gatekeepers, and contributors get rewarded fairly through token economics. And this is why this system is more resilient and robust. If decentralized finance was moving fast, then decentralized AI space is moving at 100x speed. Today, we have more than 17,000 AI tokens launched on Virtual's platform only, more than 500 AI-related products listed on Messari, and more than 1,000 tokens listed on CoinGecko. Of course, 20 of them are more speculative and meme-adjacent tokens, whereas, for example, 20 represent real movers in the space like SingularityNet, Fetch AI, Eliza, and others. If we look at the Messari AI sector, we will see that many niches are quickly filling up with new innovative products in machine learning, automation, general compute, and more spanning the core infrastructure layer, interface layer, and application layer. And if we look at this subsector, we will see that AI agent projects are taking the biggest slice of the pie. According to Misari, over 1.39 billion was raised by AI agent projects in 2025 only. But here's the catch. We still haven't seen those agents scale and become really usable. So far, the most successful use cases have been speculation and memes. Most of agentic projects are early stage experiments or simply proof of concept. They lack strong value proposition and return on investment. And according to Gartner report, more than 40% of agentic projects will be canceled by the end of 2027. And this could be the harsh reality if we don't scale AI agents and upgrade it to tools that are actually usable, functional, and have a strong product market fit. So within this emerging Web3 AI tech stack, it's essential to pay attention to the foundational layers, enabling the creation, automation, and scaling of autonomous AI agents. Let's backtrack. This is the Web3 stack that many of us have seen before. It's designed by Coinbase. Applications on top, protocols in the middle, infrastructure at the base. It's clean and powerful, and it's gotten us this far. And we've seen many versions of this stack evolving throughout the years, but the concept stays the same. This stack wasn't designed for agents. It was designed for direct human interactions, and it's ill-equipped to support what agents actually need. And let's look at the AI framework mapped out by Misari, a multi-layered architecture spanning governance, economic layer, identity, trust systems, execution frameworks. See how it assumes what AI agents need. In AI concept, these layers have been already modeled, but they're still missing in Web3. And that's the mismatch. This mismatch creates critical gaps in Web3 infrastructure that represent exactly the opportunities for us to build the products that crypto AI currently needs. So I've walked through Misari reports, CoinGecko, root data, DA reports to map out the gaps that are missing in the Web3 infrastructure, the areas that remain fragile and underexplored for crypto AI. And as a marketer, I love building funnels, so I've done the same for AI agents. Agent funnel or agent staircase, you name it. It combines the general infra layer, agent-specific core, and agent intelligence layer. And I'm going to walk you through each of the layers, and in the very bottom, we will discover what actually moves the needle at the current market state. So to get started, decentralized compute and storage. AI agents require decentralized compute and storage that could scale for high-performance workloads. Currently, Filecoin, Aether, IO.net, Render, Fetch are working in this direction. They're building the backbone of decentralized compute and storage. It's still much a work in progress. For example, Aether, Render, Fetch AI, they provide decentralized network of GPU compute where anyone with spare GPU capacity can contribute to a global pool that can be rented by ML AI developers for model training, inference, data. And Filecoin, for example, is building a decentralized storage for high volume data that is also essential for AI agents. Privacy-preserving computation, that's another important thing to discuss. Here, let's talk about confidential AI. What is confidential AI? Confidential AI is when AI agents can process data without exposing it. Most of confidential AI these days rely on TEs, trusted execution environment. It lets AI models run securely and fast, but the trade-off is that you rely on a centralized hardware, Intel, ARM, or whoever makes the chip. And they are not the end game. So ZK is the next stage. They flip the script, and instead of trust me, I run this model, they allow to prove that inference happened correctly without exposing the input data, the model itself, and the computation process. And there is also FHE, which is fully homomorphic encryption, the holy grail of privacy. They're used for highly sensitive workflows like healthcare and finance, and they let AI agents to run computation on encrypted data without ever revealing the raw input. But they're super slow, and cryptographers are currently closing this gap. So it's still much work in progress. And while Web2 is advocating for TEEs, which, by the way, we all use in our smartphones. It's called secure enclave or secure element. So while Web2 is advocating for TEs and Web3 is sticking to ZK, AI agents don't need this tribalism, they just need privacy that works, and we might be heading towards convergence. Interoperability. Interoperability has always been a problem, and it's still a problem. We still don't have established standards and protocols that could let agents work across different platforms and chains. It's still fragmented. And here I'd like to mention Chainlink CCIP. That's been already used by some of the ELIZA OS agents. It gave them the cross-chain capabilities on Solana. And whereas ELIZA OS agents can abstract away wallet management and RPC calls, CCIP can let agents operate securely with token transfers and transactions. Incentive and governance mechanisms. AI agents need strong crypto economic models and governance frameworks to incentivize operators to host, maintain, and manage AI agents, including agent behavior, policy permissions, and dispute resolution. Currently, projects like Singularity and BitAnswer are implementing these governance frameworks. They're still not yet fully developed or widely adopted, but to give you an example, for example, on BitAnswer, that has subnets, they incentivize ML contributors for providing data, model training input, and they let them score their contribution. So they use peer scoring, and based on the quality of their work, they can earn more rewards or they can lose rewards. So with the foundational layer laid out, let's move on to agent-specific core. Abstraction and usability, trust, identity, provenance, autonomous execution. Here, a very simple example for abstraction and usability. So wallets were not built for agents. And this is the first infrastructural bottleneck. Current wallets are designed for humans, not agents, and they require manual approval of almost every transaction, interaction, whereas agents need pre-approvals. For example, pre-approve swaps under 500 or delegate this DAO vote into this logic tree. And agents don't need a MetaMask pop-up every 30 seconds. They need multi-agent permission systems, scheduled event trigger actions, and programmable approval rules. Identity and reputation systems. Currently, agents are lacking verifiable, searchable, and unique identities in Web3. There is no shared identity registry where agents can actually register their name. The discovery is broken. Users cannot find, verify, or rank agents effectively. And it's disconnected from reputation. We can't track agents' history, performance, or trust score. And this is how agents discovery looks like today. AIXBT agent launched on virtuals with the hell hack string spaghetti of wallet address. That doesn't make sense, and we gotta change it. And this is the multi-agent economy that is also put on hold because we don't have identities. For example, if we have multiple agents collaborating with each other, agent A portfolio manager that is finding the best yield farming opportunity for the user, Agent B, DeFi scanner, that claims 15% API on new protocol, and Agent C, risk assessor, warns about smart contract risks. For all of those to operate securely and seamlessly, they need to be able to discover and verify each other. And without identity, they cannot do that. And on the right, you can see the example of the agent with an identity that has the trust score, profitable trades, transactions, and assets under management. We can see this all. And because of the things that I mentioned earlier, execution is fragmented. There is NLP to transaction gap. Intent recognition exists, blockchain execution exists, but the bridge is missing. And we have AI that can understand us, blockchain that can execute, but the middle connecting the human and agent intent with the actual on-chain action is missing. And that's the disconnect. For example, when I say swap 50% of my USDC to ETH if ETH drops below 4K, right now that's fragmented across 5 different tools: chat agent, price oracle, smart contract, wallet, UX interface, and nothing bridges the full flow. That's the disconnect. And there is something else here, the catalyst that would turn the isolated layer into the system where agents continuously improve, collaborate, and build trust across every front. This is the unified data. And for now, that's the most crucial part for AI agents to finally scale. On-chain data is not treatable, and raw blockchain feeds are not going to work. Blockchain is transparent but not treatable, and AI needs structured, normalized data. So, for example, from this example, AI agent scans, and it doesn't know. Was it a Uniswap swap? Was it triggered by liquidation? Has the user just breached funds from optimism? Was it front-run by a bot? Agents also need data diversity. They don't need just blockchain data, but they also need Web3, general data, socials, enterprise data. And the data context is currently fragmented. It's scattered across APIs and it comes in different formats. Here you can see the different formats that developers usually need to stitch together and integrate separately because every data source usually requires custom integration. So instead of, let's say, instead of reasoning, in this case, 80% of compute, 80% of power AI agents, 80% of the time, AI agents spend on normalizing different schemas, integrating different API sources, and they can miss critical context, and they can ultimately make poor decisions because data sources don't connect. So here you can see the example of limited LLM capabilities without having sufficient data. I asked ChatGPT and Claude to help me build the trading and investment strategy and get access to stock and crypto market data. I don't have, so yeah, let's see what ChatGPT and Claude would say. So yeah, not to wait. I don't have live access to market data by default, but I can pull up the up-to-date stock and crypto prices charts. So basically they offered me instructions and recommendations, but they couldn't actually provide me the full financial analysis as I wanted them to do. And we really want agents to execute, not just give us recommendations, right? And to make it happen, here I also want to mention one more example. So I decided to be more specific and sophisticated. And the question I asked was from July the 1st, 2025 to July 31st, 2025, what was the maximum drawdown based on daily closing prices in USD for ENA, ETHFI, and ETH? So essentially, ChatGPT and Claude answer was that they asked me to provide access to the data because they didn't have it to make a proper analysis. Sorry, are we running late? Should I wrap it up? Okay, so let's get closer to the juice. To upgrade AI agents and to give them real utility, we need to feed them with normalized data because data is critical. Data verifiability, accessibility is critical for AI in Web3. And current solutions are still mature and we don't have the unified data layer yet. And this is something we gotta pay close attention to. And I'm gonna wrap it up here because we are running out of time. But if you have any more questions, I'm really happy to answer them after my talk. Thank you.
I have one question, and that is, I've request for people to get a hold of your slides. So is it just connect with you and you'll be able to, yeah, I must have had some great information on the slide. So, pardon? No, the people want to be able to, they loved your slides, so they would like to get out copies of your slides. Oh. QR code? Real quick to the QR code. Get your cameras ready. And then we're going to bring up David Menard on Invaluable Labs on meme coins to real world assets. We've got 2 sessions. So we've got meme coins to real world assets, and then we've got a killer AI panel that is going to be really cool. And then we got happy hour. So two sessions. Is this it? All right, that's it. So take a quick photo. All right, is David here? Oh, right here. Awesome, David. Thank you. Meme coins to real world assets.
Yep. We'll make it fun. We'll make it interesting. I know it's late, that part of the day. I start to doze off. So my name is David. I'll kind of get into my background in the next slide. But I want to talk about permissionless RWAs. A lot of what we heard earlier are gated. It's mostly going to be new financial instruments for institutions. It's not necessarily what got me into crypto was more of the decentralization for everyone to have access and to build new kind of tools and fun stuff. So I thought I'd drop a picture of Walt Disney to kind of set the tone. You can see what I'm talking about. Imagine your grandfather was friends with Walt Disney and he hit him up and said, hey, do you want to buy Mickey Mouse coin? And he was able to buy in early on. And next thing you know, that's a multi-billion-dollar media company and a brand and super iconic. So I see meme coins having an evolution to become a permissionless RWA, specifically for art. So I've been building on chain since 2016. I put billions of dollars on chain for supply chains for publicly traded companies. We had no token, so no one knew who we were. We had big investors like Polygon. Some notable wins I had, I bought Lend before it became Aave, and I got Shiba Inu 10 days after it launched. So I tend to be a little early to things, and I kind of like, where the community can be. So just looking at a few inflection points that we've had, it's always a new group of people that get into crypto. So when we look at DeFi Summer, it was a bunch of commodity traders, like weed farmers and stuff like that, that wanted to get into the next commodity. They're doing basically financial gymnastics with numbers and money. So that's cool. It's fun to learn. Then there was the NFT boom. So now you have digital artists coming into the scene saying, okay, I'm a starving artist. No one wants to buy my art, but if I put it on chain and now everyone can speculate on, is this the next Picasso? That became a new ecosystem for them to make money. Meme coins came out, but it's turned into more of a player versus player casino type setting, thanks to Pump and a few of those others. So it's really on the short attention span. And that's been magnified now with the creator tokens opening up streaming. So it's just pure dopamine. And that's not necessarily what got me into crypto. And I don't think that's what's bringing net new people into crypto. They think everything is like this. This is the white elephant in the room. Everyone outside of this room thinks we're all these people, where we're just making another Pepe, another purple Doge, or infighting and saying, I don't know, fat CZ on crime season is, the next ticker. So seeing how these things have evolved, this is just an early primitive for what I call community in the loop. And touching on agents and AI agentic workflows, those are programmable community members. So I don't know if anyone's launched meme coins or tokens in the past. It's incredibly difficult to keep everyone's attention. And one of the biggest issues was constantly creating content. And it moved away from, let's say, the liquidity wars of Uniswap and PancakeSwap days of devs trying to create the next protocol to now just, oh, I'll just draw something and then move that way. So the same problems persisted. People were still rugging. You still had engineers or you still had artists that still wanted to make a quick dollar, and they're not necessarily in it for the long term. So with AI agents, it's really the missing piece for DAOs. DAOs have been maturing, let's say, on voting and those type of mechanisms like quadratic voting, that kind of stuff. But where they need help is in the back office. It's not so much, great, let's all make a vote on Friday, but then who's actually going to do the work? Who's going to follow up? Who's going to produce the actual content so that we can go viral on TikTok, Instagram, and not just crypto Twitter amongst the next Cosmos ecosystem or something that's just, insular. So I see meme coins as the future of character development on chain. So if you think Netflix, Hulu, if you're about to launch a show, you're about to have go to the Cannes in France and stuff like that, you're still a starving artist, you're still asking for funding. This would be a way that you can bring net new people, the screenwriters, the animators, the comedians, people that are actually really good at storytelling. So I think giving them infrastructure and then using meme coins as their version of a permissionless RWA. That's actually what I'm really, really excited about. And when you look at the tools, there's an amazing wealth of tools now for AI. But again, it's coordination and how do you build a team around this? And it's going to come down to suites of agents that will be able to have agentic-based outcomes. So not just like SaaS, but we actually want to produce a short-form content video every single day. How do we do that as a community? Can we all prompt and say, hey, I want Brett to do this, he wants Brett to do that, but then ultimately now Brett is, making that type of content based on the community's involvement as well. So this is kind of just leading to where I'm kind of focused now. We're starting an AI animation school for anyone that wants to learn how to animate. We're picking meme coins as our characters, so that way, the teams that are being built in the community, they're able to put together their own shows and then start to have the trading fees earned from their tokens and stuff that are being launched from there. So just wanted to throw that out there as you guys and share that, but thanks. Cool. Any questions or that was about it? Cool. Thanks. We'll hit happy hour early then. Cool.
Probably all just be in agreement.
Testing, testing.
I think that works.
Sit on your picture.
We good to go? Awesome. Welcome, everybody. Last talk of the day. I think all of us are going to be excited about this to be over. So let's kick this off. We're going to talk about crypto and AI. And one thing that's interesting is that I think we may have very different opinions on what this means to us. So what I want to do is calibrate at the beginning and have each of you actually tell us what crypto and AI means to you. Just what is your definition and what is kind of the current interpretation that you have for crypto and AI? And we'll start with Jack.
All right. So I think there's a lot of crypto AI overlap. I think one is just the most product market fit is that all of us crypto builders use AI to build stuff. That's like the number one. But then the big piece that's coming now is this agentic AI and using models to help individuals trade better. So it's almost like having a friend who works 24/7, who's a hedge fund expert that's going to manage your portfolio. I think that's what we're going for. I think the third piece to me is this, decentralized inference and decentralization down the whole, LLM stack. And that's, I think, a completely different beast and still further away. For me, the sweet spot is around like programmable money and programmable intelligence coming together to do lots of things.
Good answer. So I look at AI, it's sort of a black box, right? We don't necessarily know how the data got there. We don't know exactly how it's processed, and we don't know exactly how the generative outputs are created. And then blockchain is the opposite. It's complete transparency. It's a public decentralized ledger. So these two technologies go together like peanut butter and jelly. They're kind of made for each other. Like do completely different things, right? So to me, it's not about like putting AI on a blockchain. It's like, how can a blockchain bring transparency to the AI? So if you're an IP holder or a content creator and your stuff's getting trained on by the AI, that shouldn't be a mystery, like how much you're getting paid. Like you should have licensing and rights and legal contracts embedded into the smart contract that will automatically pay the creator if their stuff's getting used or trained on by an AI. So that to me is like the ultimate way that these two technologies should be interacting.
Yeah, just to relate to what you said, blockchain will bring transparency and decentralization to AI, and AI will be something that will enhance what blockchain already has, though those two technologies are completely opposite. For example, crypto is deterministic, whereas AI, as you said, is probabilistic and non-deterministic. So they will enhance each other's strengths, ideally. And yeah, let's see where it goes.
One pattern that I just noticed in all of your answers is that I feel like there's still a split in kind of how you classify this. And the two streams I'm seeing is one is that some of you are saying that crypto helps make AI more transparent, which is effectively the bucket of AI is amplified with crypto. But then sometimes from some of the statements, it's the other way around, which is like crypto is amplified with AI because you have simplification of like how we manage our transactions in crypto. And what I'm curious about is knowing where each of you stand on like, are you part of one camp or both? Where is crypto better? Is AI improving crypto or is crypto improving AI in these integrations? Anyone can go. I'll just...
Yeah, I mean, I think both camps, this is not going to be very drama. So sorry, I know you want a little tension on the panel, but
let me rephrase the question. Is crypto AI a scam? No.
Yeah, there we go. No. So I think that, for me, the world I live in, it's about, okay, we live in crypto. We're, helping people trade, swap, pay, transact, et cetera. What role can AI help play in that to make that all seamless, faster, more efficient, more intelligent, give people advanced, powers they don't have today? And I also see this other world that, you're talking about polling, using crypto to actually make AI more transparent, more more fair, et cetera. I don't think they're oppositional at all. I just don't live there at all. I'm in this crypto native world, and like, how can we use AI? And that's my view.
So maybe help me clarify this thing. So I actually, the way I understood your comments were, I think both of them are the same thing for what you said there. I don't think you're the other side, because the other argument of this would be crypto is helping AI agents perform faster or more easily versus enhancing any of the crypto stuff. So effectively, I feel like both of those cases are in the category of agents are doing whatever they want, or LLMs are doing whatever they want, and they can now leverage crypto infrastructure to simplify some of those things, which effectively is crypto is a tool to help AI scale better.
I would look at it a little differently. Like, to me, it's crypto and blockchain, and you have to look at those as two different things. So you can have blockchain, public, decentralized, transparent ledger that serves an incredible utility in that capacity without any crypto on it, right? I mean, certainly there's going to be the crypto for the people who maintain that ledger, but you don't need crypto, you need the blockchain. And that's the transparency you need. But crypto is also really useful for payments, to accelerate payments and to make it much easier for agentic commerce to happen than TradFi rails. So you need crypto makes AI agentic commerce better and faster. Blockchain brings transparency, but they're doing two different functions.
The accountability of what's going on.
Yeah, the accountability of what's going on, but they both make AI better. And so to your point, I would say yes, by far, crypto and blockchain make AI better than the other way around.
Alice, what do you think?
Yeah, just to add on that, I think it's more about blockchain and crypto making AI better, but also AI making us more efficient and improving every front of Web3 professionals, starting from product strategy and then finishing up with content that we produce for the end user.
Are you able to give some examples of what you've seen, how AI has been used to help make DeFi or just generally crypto products better?
Yeah, a very simple example is how teams can scale faster and more efficiently, how LLM can help us identify the right target user persona, craft the right messaging, improve our landing pages simply because the UX, improve the UX as well. All of these areas, starting from backend developers and finishing up with marketers, have been already improved. And I, as a marketer, I'm noticing it on socials, I'm noticing it in the blog articles, and that's actually a real paradigm shift for Web3 professionals with AI. But I do believe that it will really help us scale the product faster and make it more Web2 level.
So I want to call it two kind of distinct examples, and I think this might be what you're getting at. So let's say and I think about it in the world of like, do I have an AI app or do I have a crypto app? And if I have an AI app where, let's say it's just a personal agent, I say, hey, book me a ticket to the movies. And I like sitting not in the middle and not too close. And this thing's talking to me, oh, great, well, we found a perfect action movie for you over at the Kabuki Theater. And then it has access to my wallet. It books it through, USDC, and I buys a ticket. And crypto then played a role in this like programmable transaction. Now, obviously, the movie theater has to be able to accept crypto, and we have a lot of infrastructure to build. On the other hand, let's just say I have a DeFi app. I'm like on base and I'm just trading, but this agent's going to help me trade and do better. Like
help figure out like which is the better strategy, or I've seen like a lot of yield recommendations. Is that the kind of stuff you're referring to?
Yeah, exactly. So I'm saying, is that kind of what you're getting at in terms of
like
which one helps one's at its core, that animal, and the other one's augmenting it?
Yeah, like it seems like the obviously, like if you can analyze something and make a conclusion or recommendation to a user, you're helping solve a problem for somebody, which is the perfect example. And if that can be accelerated with AI, that helps you get to a point where your customer is happy with your product. But the other part, which you kind of talked about this movie example, is that you're effectively giving an agent, which is just a piece of code, the ability to behave like a human or a company or a person with money without having access to things like identity or a bank account or a social security number. And that's kind of fascinating because that's only possible with basically crypto, unless you want to just do something for free because you just have database entries that just let you do that, but you can't actually transfer value between two parties. And that's like a perfect example that blends both. Um, and I don't know how to think about like which side wins long term. Obviously, it's not a competition. They're going to be you need both. You need to help enable things to talk to each other seamlessly, and a lot of communication will end up being commerce specific. And clearly, we're seeing like Coinbase's X402 win, and that's kind of thing what you're referencing. Um, and to me, that's super interesting. So I was just kind of wondering like how each of you basically think about integrations for real life in those things. Maybe to Eric, like tell us more about what you do and how does that fit into the broader picture?
Sure. So yeah, kind of like what I was just talking about in terms of the value exchange between the two technologies. That's a lot of what we do at Blocksee is, we provide Web3 commerce and analytics, and we're really focused on helping content creators, artists, art galleries, private data centers that have lots of unique content. How can you embed the appropriate licensing, the appropriate IP rights, all of that stuff into smart contracts and then into payment so that you can have sort of an end-to-end protocol that allows for licensing, rights management, smart contracts, and then payments all through the same sort of ecosystem. And so that's what we're really focused on helping our clients do, is sort of manage that whole process as seamlessly, as efficiently as possible. And the big problem is that ERC 721s, ERC 1155s, they haven't held up in court. They don't withstand legal scrutiny over who owns the asset. All you own is the token, but you have to have the KYC. You have to show that there was actually a person who bought something. You have to have the receipts. You have to have all of that stuff embedded into the smart contract to withstand the legal scrutiny to actually determine ownership. And mostly that's not done. So that's what we're helping.
And is that what you mean by license?
Yeah, I mean by licensing that shows that you have is there a Creative Commons license? Like what are the terms that I allow you to use my content under?
Like in GitHub in the open source library, you're able to, that's where you're putting that.
Yeah,
NFT.
exactly.
The attribution altogether.
That's right. The attribution, yes, all of that. And then making sure that's appropriately embedded into the smart contract along with the asset.
Do you think privacy has a part in this world?
Absolutely. So, one of the biggest problems of bringing blockchains into fintech is that you can just look up anyone's wallet and see how much money they have, right? And so we have this blockchain called Pangea Protocol that lets only the bank and the person have the keys and actually see what's in the wallet. And so, yeah, I think privacy is really important, and it's something that we have to figure out, do a better job with it in blockchain if we want mass adoption.
Jack Ellis, yeah.
Yeah, I talked earlier today about proof of encryption, something we're launching that enables private computation in blockchain, and both from the sense of like preventing MEV, which is really valuable for agents to prevent front running and slippage and all of these things, but also like passing the barista test, which is, can I buy a cup of coffee and the barista doesn't see how much money I have in my account, right? And if you think about that at scale with agents, it's even more important. Someone can say, hey, this is Jack's wallet. Look at all the stuff he's buying. Look how much money he has. And well, I think he lives here. Let's go to his house. And so, yeah, privacy is critical. And I think you have to do it in a compliant way, though, or we're not going to get anywhere.
Yeah, privacy is really critical and essential, and I believe that that's exactly where the convergence of Web3 and AI agents will make sense, especially with CK, TEs, FHE. If we look into something more complicated, like the convergence of all of these three solutions, we might find the best ever approach to privacy and really enable users to keep their data, to own their data without exposing it.
I think one of the themes I'm getting here is we kind of have talked about the aspirations of what we want to see, and we've kind of talked about what we have seen so far, but there's still a pretty big gap on how do we get there. And the thing I'm kind of curious about from each of your perspective is from at least an infrastructure side, what is missing or what could be better for us to actually leverage AI with crypto, whichever direction we are excited about, and expectations for the infrastructure to actually handle this world, and what do you think is like the state of the art and what's kind of the wish list?
Yeah, to get started, there are several critical pieces that currently the Web3 infrastructure is missing, and the most essential one is data layer, where we need to pay close attention. Outside of that, I would say identity systems, wallet interfaces, governance framework, privacy, and off-chain to on-chain communication matters a lot. Also, decentralized compute and storage, and the data is something that AI agents currently need to really upgrade to the tools that we could use on a daily basis. Because without the sufficient data, they're just flying blind and they cannot act autonomously, reason autonomously, and execute really intelligent decisions. This is where we gotta focus currently.
When you say data, like what part is missing and what should be on the blockchain there? Like what's an example of how do we make that better?
For example, we have a MetaMask wallet. I know that's not the best probably example, but for example, if we have multiple agents operating in Web3 and they need to manage our wallet, MetaMask implies that there is a human on the other end of the private key. It asks you to approve almost every interaction and every transaction, which doesn't make sense for AI agents. They need programmable pre-approval rules. For example, pre-approved swaps under 500. And currently, this is something that is missing. And this hinders the multi-agent, multi-chain economy where multiple agents can collaborate to complete the task.
Cool. No, thanks for that additional context.
Just to add on to that, I think that just what you're implying is that we need a universal transaction layer. And so there's a blockchain called Wire Network, which is doing that. I think they're one of the key components to making this agentic Web3 commercial.
This is the WYRE, is that right? Or
No, it's Wire.network, and their TGE is coming soon. And basically, the way the Wire Network operates is that you mint a deed on Wire. You can also mint NFTs and ERC20s directly on Wire, but it's designed to basically mint the deed to the underlying asset that can exist on Ethereum or Solana or any chain. And so, if the agent is holding Ethereum, but it wants to buy a Solana asset, you don't want to have to go through the business of getting the right crypto in your wallet. So if everyone is interacting through Wire, then they handle all of the swaps for you, and you don't have to worry about any of that stuff. It's a universal transaction layer blockchain. So I think that's a key piece of infrastructure that we need.
And just so I understand that better, could you contrast that with like a bridging solution that just has a really good API?
Yeah, it just eliminates the need for bridges. So you don't have to have them in place. You don't have to worry about the bridges already being there. They already have handled all of that through a system of pointers. They basically just point the asset, point you to the underlying asset through their blockchain.
Super cool.
So I'm taking a little different angle here. I think we have the infrastructure. I think what we don't have are the use cases. So, and I'll give you a little example. I started an AI company in 2008, and people are like, AI, what the heck's that?
Or you mean machine learning company?
Exactly,
Jack.
machine learning and big data. Yeah, it was advanced analytics, machine learning. It depended on who you're talking to, but it was effectively early AI. And we were like, hey, let's make sales intelligence products. And we just ate dirt for like 2 years, like hardly any sales. And then all of a sudden we figured out the use cases. Then we sold the use cases, not the tech. And we had huge growth, and we got 18 of the 20 largest pharmas and biotechs. And then when I look now at this whole AI crypto crossover, everyone's like, oh, you can do all this stuff, but what are the use cases that everyone wants to do now? And is it buy a ticket to the movie? I don't know. I don't think that's it. Is it?
What are the use cases that are not talk to a chatbot that behaves like any other anime character? Is that right?
Yeah, but I think the thing is, and there's a societal acceptance, combined with like technical readiness. And I think the technical readiness is there, but I think societally we're still like, you know, I haven't had a friend who doesn't work in crypto say, hey, you should use this app and it does all this stuff for me. Like, what are those use cases? And I think when we find those and like nail those, all this stuff's going to happen really quickly.
I mean, I can't disagree with that. I agree. But the thing I'm curious about is I feel like all these things still fall into infrastructure, which implies that like it should be invisible to the user, right? Like nobody says I'm going to buy this product because it's AI. It just says no, it solves my problem, and it just happens to be the case that a lot of the decisions are fast or intuitive because it's trained on me or has the right context. Similar to like I don't care what database somebody uses when I have to like buy a plane ticket. Like, as long as I get the plane ticket, it works. So are we sort of in a way implying that there will be products that are AI products and that's kind of what's special about them that makes people use it, or they're just going to be good products?
Let's use X402 as an example. Like search that in Twitter. You'll find like 20,000 posts today. Okay. Everyone's talking about it, but no one really has a great use case. Like, oh yeah, they're like, oh, agents are going to be able to pay each other and just using the native internet protocol. It's like, I get it. We're building all this stuff for it. But the one use case people talk about is like, oh, Cloudflare being able to like, if you have Cloudflare, you'll be able to like microcharge people
for indexing their websites, right?
Yeah, exactly. But it's like, are people asking for that today? Are they feeling exposed? And like, if we come to them and say, hey, add this to your Cloudflare, like maybe, like that might be it. But we need more of those that are actually like less hand wavy and more real.
I mean, once again, I don't disagree, but to put all of you on the spot, how do we navigate around this maze? Like, any advice as founders to anybody else on how do we actually think about making this a reality? There you go.
Yeah, I think Jack's right that we have to define the use cases better, the value, the benefits, that, you know, instead of feature statements, more benefit-oriented statements for sure. You know, I think that the ultimate use case, perhaps, you know, this is something we were just talking about in my breakout, is preserving democracy, right? So kind of like, I think that as this totalitarian, authoritarian, whatever it is, thing that's descending across the whole world, not just here in the US, to the extent that there's like kind of a breaking point where we start seeing people being censored, people not having the privacy controls that they want, people realizing that they're now living in this surveillance state, not just kind of accepting it as a default, but actually seeing real harm in the fact that, oh, I can't use certain words, or I can't call the president a certain name because now I'm labeled a terrorist and I'm going to get debanked. You know, so it's like when people start seeing that kind of stuff happening, it's already happening, but people start seeing it happening at scale, I think they'll really start caring about wanting to own their data, own their privacy, own their content, not feed the beast anymore. And that's what I think will be the tipping point. But we need to be ready. We need to keep building this infrastructure to be able to have this decentralized system that can resist these centralized monoliths that are taking over.
Yeah, I think pretty good points. I think to answer your question, it's about like product market fitting and sales. Okay, you got to get out there. And
how do you make a pitch to a LLM agent?
No, I mean, you got to go pitch businesses to say, hey, do you want to, how about this? And like start landing deals and start, you know, and we haven't had to do that in crypto much. You can just build great stuff. And
no, you just build it and then others will.
You have to build. You can't sell it first because you've got, you know, and so.
We're an infrastructure company.
I'm saying bad things here. Just censor this, please.
Wait, is this being recorded? Oh shit! No, I'm just kidding. No, we're good. No, I mean, I think one of the things that sorry, anyway, actually, Alice, in case you want to say.
I'm on the same page with Jack. I think what we are currently lacking is clear business value and strong product market fit and value proposition and ROI. Most importantly, ROI. If we at least focus on those areas, we will already improve our AI crypto sphere.
No, I mean, to kind of at least my summary of this, and if I were to slightly answer my own question, what I would say is that one thing that we've noticed over the last 10 years in crypto is that we've effectively been building infrastructure for a scenario that we know is unlikely to happen, but it's not a zero probability case, which is a lot what you said, Eric, around people actually do get debanked. There is a world where your data and your information can be used against you, and it's becoming more and more common. And having an option to be not part of that system is actually crucial. It may not apply to everybody, but there will be a point where you may need that. And I think crypto and AI is in that same category where we've already seen 10 years of us working in this space to do these things that I was like, oh, why is it's not needed, or why is this built? Like, why are you against banks? Like, nobody's against banks directly. But having the ability to exit the system is actually a pretty cool option that most people don't have. And I feel like we're in that same path with AI and crypto now. The only thing that I see optimistically that's better than the last cycle is the length to find a product market fit is much smaller and shorter. And the part that works really well is that we've effectively declared that crypto AI is just mostly around payments, because now the AI is helping build products and solving a problem, and it's just facilitated with payments passing seamlessly between two parties. And that's actually quite helpful. So with that, I want to thank all three of you, Alice, Eric, and Jack, for an amazing conversation. Please give them a big round of applause.
Thank you.
Thank you.
So we've got happy hour coming up. I want to thank Mini Doge, and we're going to play a little quick video, put up their new logo. I put up the incorrect one, but they are the sponsors of the happy hour. So I'm grateful for Mini Doge. I'm grateful for SKALE and all our great sponsors that were up there, Edge and Node, of course, and many, many others. So thanks for coming. Really appreciate you all coming, making it a really fun day for me and for everybody here, to our speakers and to our attendees. Thank you. Go out and build things, build use cases. Jack.
Darkness and God lost hope. But now, darkness swallows every. Hope is like a candle in the wind, swaying uncertain. Who I am just a puppy walking in the dark. But I believe that the world needs a ray of light, and this light may be ignited by me. No one believes that an ordinary puppy can change anything. But if I don't try, who will? If you move forward, you can always find the light. It turns out that true light comes from within.